Hello and welcome to CNBC-TV18 special coverage here from our budget headquarters. I'm Shireen Bhan and joining me now is the team from North Block, the budget architects. With me, the Economic Affairs Secretary Ajay Seth and the DFS Secretary Vivek Joshi. The budget architects, gentlemen, congratulations on a budget that has been very well received from all quarters. Economic Affairs Secretary, if I may start by asking you about the growth estimates as well as the projections that have been made in the budget. 10.5% nominal, and by most accounts, that is what the market was expecting, between 10 to 12%. The survey had gone with an 11% number. Why did the budget go with 10.5?
So like last current year, 2022-23, we believe in having or adopting conservative numbers. So there are no adverse surprises moving forward. So 10.5% nominal growth rate we feel is a reasonable assumption, and that has served. Like current year we had presumed 11%, and that served as well. It turned out to be higher for various reasons. We do expect that in the coming year there may be an upside surprise on the growth side, which economic survey presumes 6 to 6.8%, and perhaps it can be on the higher side rather than the lower band. And inflation, of course, we expect it to cool down, and it's already come down below 6, maybe around 4% or so. 10.5 should be a doable number. 10.5
should be a doable number. You said that you hope to get closer to the higher end of the estimate, the band that has been projected by the Chief Economic Advisor of 6 to 6.8% in terms of growth. What are the upside factors that you're working in? What could potentially take us to the higher end of that band?
See, this year, the latest estimates are showing the current year economy will grow by 7%. We do understand that global environment is quite tough, so there will be an impact on exports. At the same time, the investments in Indian economy, gross fixed capital formation, is doing very well. And that momentum is still there. We expect that coming into the next year, that momentum will remain. And at the same time, so private investments is back. At the same time, government has not just maintained, it has stepped up public expenditure on capital assets. So that should further strengthen the investment story.
On inflation, you said that you do expect inflation to cool off significantly, and we've already started to see inflation taper. The global scenario is different. The economic survey talks about well-entrenched inflation leading to a longer tightening cycle. What gives you the hope and the confidence that we will see a further tapering in inflation, especially given the fact that China has bounced back, there is a reopening that could have an impact as far as commodity prices, etc. are concerned? What are you factoring in there?
There are several factors are there. Yes, in the advanced economies, the inflation levels are much more than what their comfort levels are. At the same time, it may lead to cooling down of their economy, and that may have itself an effect on cooling down on the prices. There are few elements where the prices are imported, meaning that on imported prices, imported inflation, that we can do a very little about it. But the bottlenecks into the Indian economy in terms of the capacity issues, etc., that have been more or less sorted out. So we expect that as the inflation is there, it should be much more moderate than what we have seen in the current year.
Two quick questions before I get to you, DFS Secretary, and I've got a plethora of questions linked to the change on the insurance side that I'll get to you with. The expectation was that the government would announce more PLI schemes. That hasn't happened. I would imagine that it doesn't deter you from announcing PLI schemes outside of the budget, but what should we make of no additional PLI schemes being announced in this budget? Is there a need to consolidate on the ones that are already in execution at this point in time?
See, there are a very wide variety of sectors which have been covered, and especially where we were importing quite significantly. And if you recall, a significant amount has been given for the solar panels, and where we import more than 90% of our solar panels requirement. So at this stage, consolidate and then move forward is not an ever-expanding list. So the sectors were identified with a lot of care, and it's the time to see that happening on the ground and then take a decision thereafter.
The question on the extension of the FAME subsidy scheme, because that's something that people want predictability on, since they are making investments in electric mobility, which is the sunrise sector, the nascent sector that the Indian government has been batting on. The sun sets in 24. What should we make of the fact that the budget doesn't talk about it at all? Does that leave the window open or the door shut?
The budget deals with several issues, but at the same time, it has to prioritize what are the most pressing issues at this point of time, which needs a solution and which needs an answer to be given. So it doesn't mean that all challenges into the economy have to be.
No, I understand, but people are making investments, so they would like to know if this is going to continue or not come next year.
That decision has to be taken down the road, not today.
Okay, that decision is yet to be taken, so the door is not shut, the window is open.
I would not like to comment further on that.
Okay. DFS Secretary, let me address the bank question, because no recap, and that was along expected lines. But again, no clarity on what happens as far as bank privatization is concerned, with the exception of IDBI Bank.
So IDBI Bank is, we are doing the bank privatization, but for the previous banks, we have yet to take the appropriate time. When it comes, we will announce it.
No legislative changes being moved, and no clarity or timeline given on whether the government intends to move on that.
There are some changes proposed in the Banking Regulation Act.
That's right.
But they are not related to disinvestment. They are basically related to...
on capability and capacity building.
Yes, on nominations in deposit accounts, articles in safe custody, safety lockers, and the rules of the priority of nomination, etc. Then there are substantial interest which have been, is proposed to be redefined, and the submission of statutory reports by the banks to the RBI.
Yeah.
There are some changes. These are, I would say...
So it would be fair to say that bank privatization and the legislative amendments required for that are off the table, at least for now? He's looking at you,
like
Mr. Seth. You want to answer that?
See that IDBI, the process is well underway, and that is something that's being looked at. As far as other issues are concerned, these are the processes which are there. When it reaches to a decision level and then it has to be shared with the economy at large, at that point of time, government would be sharing those details.
Okay. Let me address, as I said, I've got a whole host of questions that have come in on the insurance side, the withdrawal of exemption for life insurance policies when the premium exceeds 5 lakh rupees. Question number 1, is the 5 lakh threshold for premium paid in 1 year or over the term of the policy? Question number 2, if a person pays 2 lakh rupees as a premium on one policy and 5.1 lakh on the other policy, will only the proceeds from the 5.1 lakh premium policy be taxed? Is there a threshold per policy or aggregate of all policies? So if, for instance, somebody has 10 policies, how can you explain to us how this is going to work exactly? Mr. Seth.
Some of these questions, please reserve it when my colleague, Revenue Secretary, comes in here.
I'll ask him as well.
Okay, but here what the basic approach to this matter is that as far as pure insurance product policies are concerned, that is no taxation or nothing is happening to them. But if that is used as an investment opportunity, what this budget tries to do is covers those, not the general insurance if it were to be. So one has to take that nuanced approach has been taken, but in terms of the exact details, I'll suggest when my colleague is coming, please pose those details.
I will pose that question. Dear Secretary, let me also address the issue of startups, because there was a lot of expectation that on the back of the Damodran Committee report that has been submitted to the government, that many of those recommendations would find their way into the budget. That hasn't been the case. One concern that has been raised, and I'll get you to clarify, the impression is that startup valuation beyond fair market value will be taxed as income if the capital is now from a foreign source. This was the case for domestic capital, but the impression is that now foreign capital will also come under the same net. Could you clarify this for us?
See, that committee headed by Mr. Damodran has done a very comprehensive work, and they have talked to several stakeholders, and that report came to us in mid-December, and then we didn't have sufficient time to give it a careful look. We had a choice to take it a few issues out of that report, but we decided that it's such a comprehensive report, it requires a one-shot approach rather than doing a piecemeal approach. So in the coming months, we will be carrying forward our analysis of the report and then coming out during the course of the year.
Okay, so you haven't acted on the recommendations that have been made by the Damodran Committee, but you believe that over the course of time, the government will take those recommendations.
Certainly, there's a purpose, and we did try, whether we did contemplate whether we can pick it up a few items out of that, but then we felt that won't be right, because it's such a comprehensive report, and it was done through a process, and they have done such a good exercise. So we should address comprehensively rather than in a piecemeal manner.
Well, speaking about addressing something comprehensively, again, the expectation was, and this is on the back of public comments that had come in from many of your colleagues in North Block, that we could see a change or an overhaul as far as the capital gains tax regime is concerned. The good news, at least from a market's point of view, was that nothing has been done. Why did the government stop short of acting? Again, is the consultation process still on there? Do you believe there is a need for further feedback, for further dialogue before you take the next step?
Obviously, there's an economic perspective to that, but I'll prefer that my colleague,
the Revenue Secretary, answers that as well. But your take on that? I mean, was this widely debated within North Block?
We discussed several issues, not just one, but we discussed several issues as a team, and then we'd come out with what needs to be addressed in this budget, and thereafter the rest are.
One of the other issues that hasn't been addressed in this budget is the issue of the crypto currency. Of course, in the last budget it was brought under the tax ambit, but there is no clarity on whether the government intends to move a bill in Parliament, etc. Is that again something that is on hold till there is global consensus on how cryptos ought to be dealt with?
Certainly, and this is the thinking now emerging in several countries, that this asset class cannot be regulated by one jurisdiction. There has to be a fair amount of understanding, the broad approach to be done, and the discussion is very much on in the G20 platform. In fact, in the coming ministers meeting in February in Bangalore, we are organizing a seminar, and it is getting into the discussion. So we do expect by the end of the current calendar year, a broad consensus should be possible as to where one is reaching it, what the policy approach should be, and thereafter, of course, each jurisdiction will take its own time and pace it, that what should be the extent of the regulation one would like to bring in.
Okay, so by the end of the year, you believe that we should have some sort of a blueprint on the way forward, and you believe that this needs to be a coordinated response globally. One of the things that the finance minister spoke about in the budget was the review of financial sector regulators. Now, what is the purpose behind this? Because I also understand that each regulator will do its own comprehensive soul-searching, so to speak, for the lack of a better word. What's the purpose and the objective of this review? What's the timeline of this review? Where do things stand on that front? See, you asked me review of regulators. It's not a review of regulators. No, review by regulators. Review by regulators. Yeah. See it in the context of what government has been talking about, that reducing compliance burden, ease of doing business. And the government itself has removed almost close to about 39,000 compliance requirements. And that has made the business much more easier to do. And this is an ongoing process. In the same spirit, different sector of economies, and be the regulators, the financial regulators, they will be requested to carry out a similar regulation. And you will be well aware the Reserve Bank of India in the past year and a half had carried out their own set of regulation. They have formed a regulatory review authority which has come out with a report which is in the public domain, and something more is happening, my understanding, and other regulators, they have been doing so. But the question is, that is a request to take it up again in a comprehensive manner. So see that which are the regulations need to be improved upon, which have to be so it's from an ease of doing business point of view. Yes. Let me end by asking you, DEA Secretary, the aspiration of India becoming the manufacturing magnet, especially in light of the fact that there is this re-globalization that's playing out at this point in time. How confident do you feel that we are better poised? Because we also have seen a fair amount of flight of capital to countries like Vietnam, etc. Do you believe that the budget has been able to deliver on trying to attract more FDI, specifically into the manufacturing sector, to make good on this potential of China +1 or India ++, as it's being called? See, some of these challenges, this can't be a single solution or single to these challenges which is there. Yes, there have been a rebalancing where we have an opportunity, that PLI is one such sector. At the same time, if you recall, the budget also announces 100 projects which are important from the connectivity perspective. So when the things become easier to do business and infrastructure are much better, it becomes easier for the industry to get located. Similar manner, the skilling part. Skilling part is not just for the conventional industry or the services sector, but even for Industry 4.0.
So these are the set of actions which are coming up in terms of better infrastructure, in terms of reducing the compliance burden, getting the right skilled workforce being available.
Yeah.
That enables it. So meaning that whatever we can improve upon, and then the effort on the FDI side also happens.
Okay, I'll end by asking you, somebody on the channel called this a triple C budget: consumption, capex and credit. Credit offtake has picked up. Double-digit credit growth is what we saw the economic survey also highlights. Do you expect that to continue, for that to remain as robust?
Yes, I think it will continue, because all banks are doing very well. All the results which they have announced for this last quarter have shown the credit offtake of approximately 18% growth on year-on-year basis. So I think so.
It will continue. Well, this is just part of the team from North Block here, the budget architects, who are finally going to get a little bit of rest today, I would imagine, after having really played the slog overs over a good part of the month. Ajay Seth and Vivek Joshi, many thanks for joining us here on CNBC-TV18 with your take on the union budget and addressing some of the fine print with us. We'll take a quick break. Don't go anywhere. More secretaries coming up right after this short break. Stay with us. We're back in a moment.